Welcome to Wall Street Confidential again. I'm Farnoosh Torabi here with Jim Cramer. We ended our interviews, Jim, yesterday before the market did a whole switcheroo on us.
Right.
We ended up positive for the days, spectacularly positive.
Right.
For investors out there wondering, waking up today with a positive market, saying, how did this happen?
Okay, discipline does trump conviction at certain times. It's clear that the economy is not as good as we like. It's clear that there's a lot of panic in the air. But it's also clear that when the oscillator, the S&P 500 oscillator goes below -5, when the bull-bear ratio goes to about to 40 or under, when we have the VIX above 30, these are very key trading indicators, which indicate that you must not hate the market as much as you do and must begin to buy or look for buys or cover. It's a lot of what we do in stocks is just play percentages. The percentage bet when we get to those three extremes is overwhelmingly, I would say close to 90% that you must buy and can't be as negative because you're going to get a V bottom. Now, the day before, we had tremendous declines before the market opened and when it opened, and it typically, as we know over and over again, you get a retest. When you get the retest and you also have this incredible extremes, you have to buy and you tend to get a very big snapback. The one thing that's changed is that because of ETF buying and selling, you're seeing, and this is something we saw in 1987 when we had portfolio insurance, but you're seeing moves where the stocks are being driven by the ETFs. The ETFs are too powerful. So if everybody comes in and buys the ETF all at once, it moves the underlying stocks, including a lot that are bad. That's how you get a Capital One, even though it reported a bad quarter, up a lot. That's how you get a Wachovia up. That's the ETF buying. It typically only short sellers come in and buy like that. And I saw that yesterday. Now, what does it mean to the average person when you see when you see that dashboard, which was flashing that it's now green after all this decline? You have to have your shopping list ready, and you have to do it two ways. You have to like the stock, and you have to like the price of a stock. So ATT at 33 is different from ATT at 36. Schlumberger at 72 is different from Schlumberger at 78. Fortune Brands at 65, different from 69. Now we're up a lot. And you want to wait. I did on my show last time, I did DuPont and IBM. They're coming down. That's ideal. But it's your indicators always should trump your emotions. And there are times when you just have to understand that you have gotten the snapbacks. Now, should we have the snapback? I don't like to look through things. People are always saying, well, wait, it's just short covering. Well, you know what? I've never seen at the bottom anything but short covering, and yet I hear that it's just short covering. And that's usually a sign that the people who haven't committed money are trying to come up with an apologist, an alibi for why they didn't act. So I think that's what we saw yesterday, and I think it was for real, and that's what I do.
For those investors still on the sidelines thinking they're just overwhelmed by all this fluctuation.
Now, one of the things that I've learned from Karen Cramer is that sometimes you miss it. And if you didn't act yesterday, you missed it. So now it's a little bit too late. Now, one of the things that I would make a point is really important is that why I like to pick and buy on the way down, as I do for ActionAlertsPlus.com, is precisely because of what happened yesterday. If you do not pick, then you miss bottoms. What I did right on ActionAlertsPlus.com yesterday was buy when things were down horribly, but because of restrictions, I was unable to buy everything, and also because of price discipline. Meaning I bought XTO at 45. I can't necessarily buy it at 45 again, even though it's come down from 55. That's my discipline. My discipline caused me to miss some opportunities, but at the same time, where I could be opportunistic turned out to be very right. Get your shopping list together and respect the indicators.
All right. Thank you. Emotion is your enemy.
Right.
Jim Cramer, thank you so much. This is Wall Street Confidential. I'm Farnoosh Torabi. Stay with us.